Welcome back, investors, to Ticker Time News. I'm Adam, and propelled by a record-setting membership renewal rate, Costco delivered Q3 22 results that beat EPS and revenue expectations, with adjusted comparable sales growth coming in at a solid 10.8%. Ahead of the company's earnings report, there was concern that the same inflationary pressures that derailed Walmart's and Target's quarterly results would come and harm Costco too. While soaring commodity prices and higher labor and transportation costs did impact Costco, the inflationary headwinds on its sales were not as strong as many had feared. This speaks to the rising popularity of membership warehouses as consumers look for bargains while buying items in bulk. The fact that Costco also offers a slight discount on gas to its members doesn't hurt either, given that the average gas price in the US is sitting at nearly $5 a gallon. Now, Costco's relative outperformance does stand out, don't get me wrong, but there were other parts of its report that were a little more mixed. Look at margins, for example. Some erosion in gross margins is keeping a lid on the stock. Excluding the impact from gasoline, core merchandise margins slipped by 46 basis points year over year. In particular, fruits and vegetables were a point of weakness, as the category lapped difficult year over year comparisons. In Q3 21, the cook at home trend led to extraordinarily high sales volumes, producing higher labor productivity. In addition to lower volumes this quarter, raw materials and labor costs increased sharply on a year-over-year basis, applying further pressure to margins. And relatedly, Costco's small EPS beat is a step back from its recent performance. In the previous 4 quarters, Costco easily surpassed earnings expectations, suggesting that the pricing actions are losing some of their efficiency. In contrast to Walmart and Target, Costco reported healthy sales in discretionary product categories. For instance, and to my surprise, home furnishings, apparel, jewelry, and toys were among the top performing departments. Now, I believe this is attributed to a more high income consumer shopping at Costco compared to those that shop at Walmart or Target. What do you think? Another area that could be seen as mixed is inventory. Inventory was up 26% compared to being up 19% last quarter. On the surface, the increase looks a bit concerning, but Costco's explanation for the jump provides some relief. Most of its increase is related to inflation as opposed to unit growth. Also, certain departments such as seasonal, lawn and garden, TVs, and sporting goods had low inventory in the same quarter a year ago. Now, on the chart, Costco is down about 17% year to date. But unlike other stocks in the general stock market, Costco hit its 52-week high only last month on April the 7th. And then it was a steep fall off thereafter, all the way to a low of $406 a share. It looks as though Costco is finding a bit of resistance around $475 a share. Now, when evaluating Costco as a potential hold in your portfolio, don't forget that they pay out about 89 cents a share in the form of a dividend payment every quarter. So if you had 100 shares of Costco, you'd get about $89 4 times a year. Overall, Costco achieved another solid performance this quarter. While there's some disappointment surrounding margins, I believe that the company is striking a good balance between rising prices and maintaining a good value proposition. Its record-setting renewal rate of 92.3% in the US and Canada and a 6% increase in paying households offers strong evidence that its model is working quite well. What did you think about Costco's earnings? Let me know in the comments below, as your comments help us all to better understand. Do me a favor and click that like button, share this video, and join us in beating this crazy market by clicking the first link in the description. And if it's your first time watching, click subscribe. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.